my wife tried to make a booking at her hairdresser's, and she got a message back saying they had 50,000 phone calls that morning trying to make bookings.
Wow.
I mean, that's absurd.
Wow.
Well, I did it by myself. Like I bought this.
And they had 50,000 phone
You do it
calls.
yourself?
Yeah, I did it by myself.
Really? Cool.
Yeah, I don't think I'm going to any barber shop like later on to save some money. Probably I can do it by myself.
Wow,
For everyone who've just dialed into this call, we're just chatting amongst ourselves before we start formally, so don't take anything too seriously just yet. But thank you for joining us today on this Climate Bonds webinar. We'll give it a couple more minutes because we have quite a few people dialing in. Pei-Yuan, we've got to follow up on Russia one day, right? That was a cool meeting that we had.
Yeah, I think so. What do you think?
Yeah, look, I mean, I thought they were keen. We had a presentation to the Russian Development Bank about taxonomy, green taxonomy they want to do. And it was very lucky that we had the Russian Railways woman on the call who was able to talk about how fantastic their bond placements in Europe had gone. So that's an interesting little global development and the bridge between China and Europe.
Yeah, that's a good point. I think we discussed several questions that we have been discussing for a while in China as well. So there must be quite lots of talking points or experience to share later on. But I will follow up with them to see what happened in the next stage.
Alan, do you want to share your screen so we get the home page up?
Yep.
While people are just joining in.
Cool. Can you see the full screen?
Yes, and doesn't it look beautiful, Jonathan? Look at that. Look at the cover of those reports.
Oh, that's great.
Another fantastic piece of design by our art director, Jason Godfrey.
Lanterns.
Lanterns with different kinds of investments. Now, what's not in there that we're going to talk about today, Jonathan and Pei-Yuan, is brown to green transition, starting to look at high carbon industries like steel and so on. So I do want to make sure we tackle that today.
Okay.
But that's for the future element. First, we're going to hear Alan do a presentation of what the report says. Yeah. And then we'll just go into a discussion. Now, you've got some questions, I've got some questions, but this is conversational. So feel free to pick up any points you think are interesting.
Yeah.
And take it forward.
Open the floor to the audience.
I'm sorry, Pei-Yuan, say that again.
Are we going to open the floors to the audience for them to raise questions?
Yes, they can type into the Q&A page on the side, and you can also see if you want the questions they're typing at any one point. So you'll be able to, if you want, say, hang on, Cheng Lin's just asked this really interesting question. Can I, this, and bring it in yourself if you want, but Alan and I will be monitoring and picking up interesting questions as we go.
Yep.
Perfect.
We've just finished our Chinese language webinar with CCDC speakers and Jonathan's colleague in Sustainable Bonds, Lu Yang. We went over time in that one, about 15 minutes over time, because it was an interesting debate. Have you got a hard finish? Could you go 5 minutes over if we needed to? Pei-Yuan, Jonathan?
Sean, this problem needs fixing. We've got to fix it as soon as we can and however long it takes. So yes, no hard stop for me.
Right, so you're okay for the next 3 hours. Excellent. Pei-Yuan?
Nah.
Pei-Yuan?
Yeah, I'm open. I'm pretty open. No problem.
Okay.
So as I can
we'll get going now. We have a reasonable number of attendees on the call. I'm Sean Kidney, for everyone who's joined us in the last few minutes listening to our chat. I'm the CEO of the Climate Bonds Initiative. This particular webinar is a discussion or first findings of our China Green Bonds research report for last year's market. And we're going to have a discussion with our panelists today about last year's and more importantly about this year's market and where it's going. I'm privileged to have with me first Alan Meng, who's the co-head of our market intelligence unit based between London and Nanchang, I suppose, at the moment, who's going to run through the key findings of the report. I have my very good friend, Guo Peiyuan, from the chair of the Sintao Green Finance and the legend of ESG in China, who's been instrumental in developing the market, and Jonathan Drew, who has a number of titles. The one I'm going to pull out now is the lead on sustainable finance for global banking in Asia Pac. But he's mainly Mr. Green Bonds, Mr. Sustainable Bonds for HSBC in Asia Pac. And we've been collaborating with HSBC for 8 years now on how to grow this particular market. We're going to be talking about green bonds, but it's worth noting that we're in the middle still of a COVID crisis. Different stages of development of that crisis is certainly clear. We have the crisis only beginning to take off in Africa and in India, and frankly in southern USA as well. So that's got a long way to play out yet in terms of impact on economies and the global economy. We have the pandemics in East Asia and in the Pacific countries very under control, albeit the odd burst. We don't know whether there's going to be a second wave, but we've already taken a massive hit to the global economy. Now, we're going to need to rebuild. We have to rebuild. China has announced, for example, a new infrastructure development investment plan, which is a response to the COVID crisis and other measures. The European Union has announced the green stimulus package and a recovery stimulus package. And other countries, many other countries, from Korea to New Zealand, have announced similar measures to try and regrow the economy. It is very clear, in the words of Kristina Georgieva, who's the managing director of the IMF, that we must build back better going forward. You know, we have another crisis looming over us, which is the climate crisis. And in fact, we now know with a great deal of certainty that the pathogen that's led to the COVID has been as a result of pathogens jumping between species as a result of environmental degradation in southern China, where bat colonies have been the source of this. And this is the same as the MERS virus a few years ago. Well, this is what the IPCC, the International Panel of Climate Change, has been predicting for 20, 25 years, that we will see a century of pandemics as a result of degraded ecosystems and pathogens jumping between species. So in that sense, this is a climate crisis or part of those predictions from the IPCC. There'll be many other climate shocks this century: severe flooding, typhoons up to 3 times the strength we currently experience, and bushfires like we experienced in Australia, where I spent Christmas in the shadow of the largest fires in modern history. So these are going to be features of this century. We need to make sure that our societies, our economies are resilient, and understand that that is not separate to green, to addressing immediate pollution problems or climate or emissions problems. It's part of the same story, that managing our economies and our societies sustainably for good environmental outcomes this century will also involve protecting biodiversity, improving the resilience of our cities and our economies. Health investments, the right kinds of health investments, as a result of understanding what happened in the pandemic, should be included and will be included in this broader picture of resilience investments for the future. In the meantime, we have the foundation market, which is the green bonds market, which has now created other types of bonds: social, sustainable, COVID, pandemic, recovery bonds, all using the same model. Let's first go and have a look at what happened last year in China's green bond market. This is the largest green bond market in the world, according to the domestic definitions. And it's certainly an incredible driver of activity in markets around the world who are looking, haven't seen this happen in China and seen the success of this market. Alan, can I ask you to take us through the key findings from the report, please, and then we'll turn to our panel.
Yes, thanks, Sean. Can you still see my screen? Shared screen, see it's moving? Yep, cool. All right, hello everyone. Yeah, so this is our fourth China annual green bond report in collaboration collaboration with CEC, the China Central Depository Clearinghouse, and also under the support from HSBC. Thanks very much. Like all these previous annual reports, we continued to focus on the green bond issuers that are domiciled in mainland China, and all their green bonds issued in both domestic and overseas bonds market. And this report not only includes basic analyses on the elements such as issuer types, external reviewers, but also this report includes some deep dives into interesting topics such as financial leasing companies, local government financing vehicles, as well as the green ABS collateral types. So let's just dive into the key findings. So in 2019, the total amount of the Chinese green bonds market in both domestic and offshore markets reached $55.8 billion. And this represents a 33% increase year on year. Well, the overall labeled green bonds is reflected on the stacked bar chart on the left. So as you can see, it's broken down into two components. One is the bonds aligned with both China's definition of green and the CBS definition of green. And the other component is the Chinese green bonds right now only comply with the Chinese local definitions of green. And in the stacked bar chart on the right, we can see China's green bonds in this global context. Well, in 2019, China was the largest labeled green bond market of the world, followed by the United States and France. And also we have some interesting findings on the issuer types. So the most noticeable one is the strong growth of the total volume of green bonds from non-financial corporates that have increased by more than 50% in 2019. And therefore the non-financial corporates became the largest issuer in 2019. And there are also some interesting findings in the financial sector. For example, we identified a strong growth from financial leasing companies as a subsector in the financial sector. So it's extremely interesting because the proceeds are usually used for to purchase like low carbon assets such as like solar PVs or wind turbines or even an entire EV fleet. And in this case, the actual operators as the lessee can use these assets. And also other interest findings includes the first municipal green bond from China, from the Jiangxi province. And this bond financed for utility tunnel, which host like water pipes, sewage pipes, and telecommunication cables, which is quite interesting. And also local government financing vehicles and green ABS issuance also has a surge in 2019. So we had deep dives into local government financing vehicles, ABS, and other things. So let's just take ABS as one example. So the ABS volumes in 2019 surged and stood at $7.2 billion. And the share grew from 5% to 13% as a market share. And after having this deep dive into the ABS collaterals, it's quite interesting because as you can see in the ring chart, so 40% of the green ABS deal were from metro or public bus companies as originators, and their deals are backed by like tickets revenues. And the 15 of the total were from leasing companies using renewable energy lease payment as ABS collaterals. And also we have seen like the solar feed-in tariffs as ABS collaterals, and also 4% from EV auto loans. And in this case, is the collateral is auto loans made to a ride-hailing company that use EV for their entire fleet.
Alan, can I ask a question of Jonathan here?
Yeah.
You know, we know there's a need for ABS in China to get things off balance sheet and to improve transparency. But this is a surprising growth in 1 year, isn't it, in the green market? Were you surprised? And do you think this is really going to grow a lot in the future? What's your hunch?
Yeah, I think these are important and very interesting, Sean, that these types of contracts or funding for these types of projects are getting securitized through ABS type structures. I think all of certainly most of the ABS deals will be onshore. We have seen so far some sort of challenges in making the pricing work to take ABS into the offshore market, and I think that's in part because you know, the underlying loans here are quite competitively priced, so there's not always room to, you know, get a deal structure that meets the international investor demand. But it's great to see the product being developed, and I think when we, you know, talk about scaling up markets, this has got to be a crucial way to do it.
Do you think that investor demand will change given the extraordinary low rates that people are experiencing in Europe and Japan at the moment? Will that margin be more attractive?
I think the gap is closing. I mean, there are, you know, obviously some complex issues around that, and sort of, you know, looking at China pricing generally. But I think we're not too far away, and, you know, markets move quickly, and I think, as you know, when the window is there, we could see a lot of funds flow.
Okay, if you're a potential issuer online, bear those comments in mind. Sorry, Alan, please go ahead.
Sure, no problem. Yes, so let's move on to the next slide on the external review types. So in the ring charts, ring chart on the left, so it shows the evolvement of the external review types from 2017 to 2019. And as we can see, the most important trend is this bit at the bottom, the blue light shade of blue bit, which represents second party opinion, or SPO. So in 2019, 38% of bonds, of Chinese green bonds that carries a form of external review, they actually has these SPOs. And that's a big increase from 21% from 2017. And of course, EY remained the largest external reviewer in 2019. And this is followed by Cicero, because, well, Cicero provided a SPO for ICBC, the Industrial and Commercial Bank of China's green bond framework. And ICBC was actually the largest Chinese green bond issuer in 2019 with $5.3 billion issued. So that's why Cicero benefits from the SPO provided to ICBC. But in the meantime, we're also seeing...
Alan, can I jump in and ask you and Sean a question there? Obviously, the
sure.
CBI share getting a little bit squeezed. Is that, do you think that's due to the differences in taxonomies, and do the latest moves from China give you hope that, you know, your gold standard of green standard, as it were, will get more traction with Chinese issuers?
Well, it's
Very
important to note.
Let me just tell more behind, you know, the figures, the percentage. So the absolute volume actually increased. So last year we had 4 Chinese issuers, you know, had their green bonds certified by us. However, the percentage, the share decreased. So this is because, you know, like last year, the total volume, all the Chinese green bond, label green bond markets surged quite a lot. And, you know, although there's a small increase in the absolute value, the share actually decreased.
It's worth noting, Jonathan, that the CBI certification is a tool for the market. In the Chinese domestic market, we have tended not to promote CBI certification, but we have supported the market with lots of training for verifiers and second opinion providers. And I think Peiyuan, most of them have done some form of CBI training over time. Because we've got a strong regulatory environment, the need for certification isn't so great. The reason why you might do certification in the domestic market is as a signal to overseas investors coming through Bond Connect that they can pick up the local Chinese bond because it ticks the international criteria. So it's a subset of the market, but it's not been our plan and our effort in the past to grow certification domestically for that reason. I just want to stress. I also want to stress that we're a great supporter of some of the second opinion providers anyway. I mean, like Cicero does superb work, for example. And, you know, whilst we have a certification scheme, we're more concerned about where the money goes and what the bond looks like. And our priority is to grow that market. The certification scheme is a tool for people who want to use it. So I don't track that as a key performance indicator, I suppose, is what I'm saying, Jonathan. However, Alan's comments are worth noting. I think the most important thing about this is the overall growth of the market. The query I have, though, is what about this NA, Alan? It's at 28% this year. What in the world is going on in there?
Yeah, so when we look at the surge, so where are these new issues, the increase coming from? They're actually corporate bonds. Like I mentioned, you know, corporate bonds became the largest issuer type in 2019. And by corporate bonds, actually in China, there are two sides of bonds by regulation. One is called corporate bond, one is enterprise bond. So enterprise bond especially is regulated by NDRC, the China's Development and Reform Commission. NDRC is one of the regulators at early stage issued green bond guidelines to kick off like the market. So most like the share, the increase is from, you know, part of the bonds regulated by NDRC. The things like NDRC doesn't require or doesn't put anything on the external reviews for in their green bond guidelines. So that's why, you know, the increase for the bonds that don't have any form of external reviews, they are actually most of them are actually bonds regulated by NDRC.
Got it. So in Peiyuan, in the change of the new green bonds catalogue that has been issued by the combined regulators, including NDRC,
Yep.
do you also expect changes from what NDRC might expect the verifiers going forward? What's your feeling?
I think what this chart tells actually reflect the reality of the bond market structure in China. So as Alan said, that in China, actually, there are three sorts of regulators. One is the central bank, one is the capital market regulator, CSRC, another is the third one is NDRC. So these are the three market regulators in the green bond market, and they have different opinions on the third-party verifiers and also the standards. So the good signal is that with the new proposed green bond standard, hopefully we will be able to harmonize this in domestic standard. And hopefully, I think the third-party verifier will become a more widely accepted standard. This is what I hope.
Alan, do you think a lot of these are green pure plays when we might be therefore less concerned that they don't have reviews, or do you think these are corporates where we really should be pushing to?
Very good question, Jonathan. Yeah, actually, in this report, we do have deep dive into the issuers, whether they are pure plays. So actually, we found, I think, more than 10 pure plays in the whole like issuers, Chinese issuers. But for the NDRC regulated companies, I wouldn't say there would be too many pure play companies, because normally NDRC regulated issuers are, you know, state-owned investment companies or government financing vehicles. So yeah, so normally they are, you know, conglomerates with all kinds of like business.
Okay, so we better get on to NDRC and get Peiyuan some more work, I think, hadn't we?
Keep going, Alan.
Yeah.
Yeah. Cool. Another finding, I mean, here is the surge in the local external review providers, such as, you know, Lianhe Equator and China Bond Rating, CCX. CCP, their share just increased exponentially compared to previous years. Right, so let's move on to certified deals. Like I mentioned, there were 4 certified deals from China in 2019, including Jiangsu Financial Leasing, who issued the first certified climate bond in China's domestic market. And also we have repeat issuers such as Bank of China and the China Construction Bank, and also Shanghai Pudong Development Bank. So we know that Shanghai Pudong Development Bank had already been a big player in China's domestic market since the beginning of the market in 2016. Well, they issued the first overseas green bonds in London last year, and that had a CBI certification, and the total amount reached $3 billion US. In general, China ranked the 4th largest source of certified climate bonds by cumulative amount, with $13.5 billion US reached, certified so far. And by the way, so by the end of 2019, the cumulative certified climate bonds globally reached, exceeded, I would say, $100 billion US. That's a big milestone. When we look at the trading revenue, trading venues, we can see 78% of the Chinese bonds were issued onshore or in China's domestic market, and 22% was issued offshore or in the overseas market. Well, in the onshore market, so China interbank market was still the largest marketplace. Well, in the offshore markets, Hong Kong Exchange represent 53% of all the overseas issuance from Chinese issuers. And interesting, that you probably know Hong Kong Exchange launched its dedicated sustainable and green exchange about 10 days ago. So I would say this would further strengthen Hong Kong Exchange's role as a popular, marketplace for Chinese issuers for onshore green bonds. And for onshore green bonds, there were 15 issuers last year, and 8 of them were actually new to the market. And of course, USD was the dominant currency, representing more than 70% of the share for all the offshore issuance. So in terms of the use proceeds, by CBI definition, so transport is the largest theme and followed by energy. In the transport sector, the green bond proceeds are primarily used for metro lines, intercity, high-speed rail projects. And this reflects the need, of financing in this in China's fast-growing urbanization process, which is quite interesting. And also in this report, we had a deep dive into the maturity profile of the Chinese onshore green bonds. So by the end of 2019, the total outstanding amount of China's domestic green bond markets stood at $140 billion US. And 88% of this total figure will reach maturity in the next 3 to 5 years. I found this very interesting when I did this research, because I feel like there are 2 takeaways I can think of. So the first of all is that, when this vast majority of the green bonds reach maturity in the next 3 to 5 years, we still expect to see the continuous momentum in the green bond market, because when we look at the issue types, so those green bonds that will reach maturity in the next 3 to 5 years, they are basically commercial banks. And commercial banks normally have higher liquidity needs, and they definitely will issue new green bonds to finance their old green bonds. So that's the first takeaway. We still see a strong growth in the next 3 to 5 years. And the second takeaway is there's a huge opportunity to further like improve the green credentials of the Chinese markets, because let's think about all these new policy initiatives, new guidelines like the new catalog. All this will be reflected on the marketplace, on the market practice, right? So for example, when the new green bonds are issued, they have to meet like the new policies, new guidelines. For example, the current green bond issuers who have clean coal in their asset pool, they have to remove that clean coal when they issue a new green bonds, right? Because at that time, it has to be like the new catalog has to be have to be reflected in the market practice. Also, this report mentioned some discrepancies between the China's domestic definition of green and the international ones, for example, the CBI definition. I'm not going into details, but in this research, we tried to find, the potential alignment. For example, the overlapped bit is those bonds aligned with both China and the CBI definition. And in this crescent-shaped part, we look at, what is the process actually used, and found there are a lot of processes are actually going to eligible assets, but it's because there's some proportion of the proceeds in that bond either financing non-aligned projects, or didn't have any transparency on these proceeds, that the bond is excluded, but the potential is still great. In this report, we also look at other topics. Well, apart from labeled green bonds, for example, we looked at unlabeled climate-aligned bonds. So unlabeled climate-aligned bonds are actually bonds that do not carry any green label, but the proceeds or the bond itself is financing eligible climate or green assets. And we identified more than $250 billion unlabeled climate-aligned bonds outstanding by the end of 2019, just in China. And also, CBI has been looking at other labeled bonds, for example, social bonds and pandemic bonds. So this is extremely exciting that CBI did some research on the COVID bonds in China. So from February to late May alone, there were almost 700 bonds issued in China that were labeled as COVID bond, and by volume, it's more than $60 billion in just 3.5 months. Well, last but not least, this report also provided action points and the recommendations for all these like market participants in China, including regulators, market intermediaries, and I'm not going to go to the details, but yeah, this you can find that in the report. So that's all the key findings I would like to talk about in the report. And the floor is yours.
Thank
Sean.
you, Alan. Thank you so much.
Can I raise a question?
Pei-Yuan, kick us off.
Sure, yeah.
Alan, just back to the page on the maturity profile. So you said that there are quite lots of bonds will need to be paid back in 3 to 5 years. I'm just wondering whether you have some comparable data in other regions, particularly in Europe. So what is the situation in Europe?
Yes, we do. So this is linked to like the tenure of the bonds. So normally in the European market, especially, the average tenure I remember was like 7 years or 7.5 years as average tenure. But in China, it's shorter. It's more like between 3 to 5 years. And the reason again is in China, bank has been a big player, and normally the green bond issued by banks or bond in general from banks are short dated.
So okay. This is what we're saying is that in Europe there is a slightly longer tenor profile, a couple of years longer, And so the refinancing is still going to happen. But in China, the refinancing was sooner. But it is important to note that the tenor averages in the green bond market are a little bit longer than the tenor averages in the general Chinese market. And this is, of course, one of the things we try to do. One of the reasons we argued for a green bond market as a way of pushing greater acceptance of longer tenor in a market that was too dominated by shorter tenor. And when I say too dominated, I mean when you're starting to introduce greater credit transparency in the Chinese market, if you don't have longer tenors, you've got greater risk of volatility. So the green bonds market is certainly pioneering that going forward. And that's an important consideration for regulators and macroeconomists around this. It is interesting, isn't it? It's I do find very interesting this idea, as you say, Alan, that the larger chunk of issuance has been banks who will refinance realistically, which means that over the next 3 years, not only have we got these new entrants that have been coming to the market that will keep going forward, but now we have a whole crop, if you like, last year's crop now coming to ready for harvest, which will then lead to further issuance. So that suggests that we're going to see significant increases in overall issuance in coming years. Jonathan, is this your view? Am I talking out of my hat? What do you think?
No, I think that's a reasonable expectation, Sean. I think one of the other things that we've been seeing, and this is true across Asia and in China a bit, not so much with the large banks because they've been regular issuers, but the corporates coming to the market often, if they're perhaps raising across different tenors, they might label some of the shorter tranches as green, and that's perhaps just a treasurer being conservative, feeling there might be more demand at the short end. So I think the bunching is not too surprising. I think the 2 points that Alan made, there's going to be a lot of refinancing activity, and a good portion of that is going to have to adjust to the new standards. But I think particularly amongst the banks, obviously in China, their, let's say, green lending portfolios, as it were, against which they're able to raise the green bonds are quite deep and extensive. And the work that China through CBRC and others on sort of driving and promoting the green loan market is another factor that's going to create more potential for green issuance. So I think that's another driver, Sean, that supports your expectation there.
And P1, my understanding is that the green loan market is 10 times the size of the green bond market already in China. So that could suggest a lot of opportunities for green bond issuance in refinancing those. Is that right? Is that really the figure?
Yeah, we actually have published a market report last year on the so-called responsible investment in China. We define responsible investment in a broader way so that we cover green credit, ESG mutual funds, and also the green bond market, with special focus on the mutual fund market. But you're right, and as Jonathan said, that the green credit, well, in China we call green credit, but green loan, green bank, and the same, right? The green bond, green bank and green credit market, it's around 10 trillion RMB in terms of market size, while the accumulated number for the green bond, it's around, including social bond, I think it's around 1 trillion, and the ESG mutual fund, it's tiny compared to that number. It's around 50 billion RMB. So you can see the banks still like this, bond market like this, and ESG market like this. But quite a lot of discussion now focus on this ESG mutual fund market now.
So tell me, sorry, go ahead, Jonathan.
I was going to say that in part I guess is driven because CBRC had the green loan taxonomy launched back in 2013 and has since then been requiring all of the onshore banks to sort of categorize and report. So the banks are very well placed, which is why it's no surprise to see you know, that we're at 10, 11 trillion of RMB of green loans in the system. And when you look at some of the large Chinese banks as a percentage of their total book, some of the bigger banks, it's now 8% and growing towards 10%. So it's a very significant part of their business.
So this market is
potential, right?
Sorry, Pei-Yun, say that again.
Yeah, huge market potential for green loan.
So this market has been dominated by banks so far. First, because of the CBIRC regulations and the growth of green credit, and then the bank market has been, the interbank market and issuance by banks, the interbank market, have certainly dominated the first few years of development. We've seen drivers like cheaper or discount capital at the liquidity lending window of the central bank. So there are palpable incentives in the Chinese market for banks to hold green bonds, of course, in this. Although this last year we saw a bit of a change. We saw the significant rise of non-financial corporates listed on the Shanghai Stock Exchange in particular. What are your thoughts about the changing investment drivers in China? I mean, is this change in non-financial corporates as a result of other people jumping on it other than banks as investors in these? Is this real yet? Or is this something to happen in the coming year? Pei-Yun first.
Right now, I still believe this is still more like a policy-driven market. As a whole, that's the logic for the market right now in China. And of course, the government is pushing quite hard for this green transition. So I think no matter financial institution or corporation, particularly the state-owned corporation, will enter this market. So I don't have the details of the so-called non-bank investor into this market, but it would be interesting to look at the details. My second point is that I think for the investor, still, besides the policy logic, it's a risk management logic. So if we can tell the risk, a lower risk feature of this green bond, I think more investors will be interested in it. Otherwise, we always face the challenge that why investors need to buy this, because according to some statistics, the green bond issuers will enjoy around 20 to 50 basis points lower price. So for investors, it means cheaper return, right? Lower return. So I think that we still need to find some reason for that. So risk may be one reason, and liquidity may be another reason. So again, I remember 3 years ago, the central bank have the so-called MLF facility, the midterm lending facility that include green bond with AA rating as a guarantee, so that banks can borrow cheap money from the central bank. And I think this is also an incentive to provide more incentive for the investor to buy green bond.
Jonathan, on this performance issue, in the European and US market, we certainly see green bonds as a premium product in the secondary market. And that pressure, they're very valuable. And that seems to be partly because of their performance in downturns, where green bonds seem to hold their value vis-a-vis vanilla bonds. And so they're seen as a value product. And then what that means is downward pressure on primary. So we see regular stories, particularly during this crisis, actually, where green bonds have come in at much tighter pricing than comparable bonds from the same organization, vanilla bonds, a few times. In China, we've seen a couple of stories around this. We saw a bond issued, I can't remember what it was, Alan, that got a price 100 bips below the central bank's benchmark price, right? So, but they're a rarer story. Do you see this performance stuff beginning to play out in China, which of course would be the answer to Pei-Yun's comment about, is it worth the tighter pricing that we might see going forward? What's your reading of performance?
Yeah. Well, look, I think, Sean, I mean, the first thing is obviously as an institution, the onshore markets are dominated by the domestic securities houses and the domestic banks. So we're less close to those pricing dynamics than we are in the in the offshore markets. I think the risk point, and going back to the loan market and CBRC, what we hear from CBRC is that they're convinced that there is lower NPLs for green lending.
That's very important.
This is why we wanted it. You know, we put the taxonomy in, and we're now collecting data to show that lower NPLs for green loan categories, and hence why they're now having this great discussion around, well, then how can capital allocations be revised to reflect that performance? So they've sort of got that, collecting some of that evidence, and they've used it to support some of the pilot project. So I think it's entirely reasonable what Pei-Yuan says, that, you know, if that's what the loan data says, it would be entirely reasonable to think that the bond market data would again suggest lower risk in those green industries, green sectors.
NPL is non-performing loans for everyone on the call. And in fact, it's worth noting that just in general in the global green bond market, Esther Law of Amundi asked us a question a couple of days ago. She asked, and she's on the call at the moment, she asked, do we have any defaults in the green bond market? And Alan and I racked our brains and we thought, you know, we could only find one bond in the whole green bond markets that had rapidly defaulted, Alan. Am I right in saying that?
Yeah, only an India, issuer had a default. Yeah,
Jane Irrigation or something. So that's worth noting, right? That this is a market so far where we've got a close to zero incidence of default, which is interesting to see how that plays out going forward. But given we're getting up close to $1 trillion outstanding globally, that's not a bad track record in terms of risk management. But look, let's go forward a bit more. We need to look at now where this is going. First question to you both. We've seen the PBOC, NDRC and CSRC jointly put out a draft new green projects catalogue, which is out for consultation. I'm not quite sure when that closes. I'm not sure the website says when it closes at the moment, but whatever. That was a pretty significant statement out there with some changes of note. Pei-Yuan, do you see this as important to grow the international engagement of the market, or is this, tell us why this is notable?
Thank you. I think this has been a very popular discussion in the past few weeks. Right now, the public consultation periods have closed. So we also submit some feedback. I think CBI should definitely submit the feedback as well. And I think the focus, of course, is the removal of the clean use of coal, the so-called clean coal. I think that this is a strong signal that telling the global market that Chinese government and Chinese market is trying to align with the global standards. But on the other hand, that also, as you said, these are the document jointly published by the three minister-level government agency, including central bank, the capital market regulator, CSRC, and NDRC. So that's also a signal that we may be able to align the domestic standard, because right now we use two standards. One is the Green Finance Committee's Green Bond Endorsed Project category. To put it in simple, we call it the first Green Bond Standard, or Green Bond Standard 2015. And another is the guidelines issued by NDRC. And now these two hopefully can merge together. So overall, I think this is a strong signal. I think that potentially will create more interest for some foreign investors, because for them, they don't now, if the standard is aligned without coal, then they don't need to distinguish whether the label green bond include coal or not. I think this is important for some foreign investors.
Jonathan, what's your take? I mean, sitting on the outside.
Yeah, look, I think coal and clean coal had just become, in a sense, probably a disproportionately large issue that was sort of an overhang of the Chinese green market development, that it's probably significantly a pragmatic decision. Let's just take that controversial topic away, because coal, we know globally, burning coal for electric power is about, I don't know, 20% of global emissions, but it's become sort of the number one toxic, public enemy number one, versus the other 80% that seems to get often put in that bucket. Oh, that's hard to abate, as though that 20% of coal for electric power is easy to abate. Now, whether you agree or don't agree with that, that relativity, I think China's quite sensible and pragmatic in saying, well, let's just take that off the table, because that's really not what we're about. We're trying to direct capital to the transition. So I think it's a good move, because it takes the sensitivity away. Obviously, there are still some differences, Peiran. I think we've got, nuclear is in the new catalogue, which I think internationally is just considered as a totally different sort of category of investment. We've got hazardous waste management. Some of the things Sean, in your taxonomy, you say, well, we wouldn't certify that as green. So there are still a few important differences in there. But I think, we've moved much more closely. I think that'll do the Chinese market reputationally a lot of good. So I think it's nothing but very, very positive indeed. I think looking forward, of course, the next thing is going to be, what's the impact of the EU taxonomy, and how does the EU taxonomy align with China's standards, and also, in a sense, your taxonomy, Sean? Because I think what we are going to see in Europe seems we're moving pretty quickly towards incentivization for investments that comply with the EU taxonomy. So whether or not you think the underlying standards are relevant for a project in China, as a finance person, if you want to go and tap the European markets, you really should be structuring your bonds to meet the taxonomy if you want to go and get that incentivized preferential rate in Europe. So it's going to become, I think, quite quickly a financial engineering game, and not a discussion on whether the underlying standards are right or wrong. So I think we're interesting times ahead, Sean, on taxonomies and standards.
As you know, we've spent the last 20 months intimately involved in developing the European taxonomy. Nuclear is not out of that, by the way. It's not in. It's in limbo for a while. It's been referred to the European Union's joint research centres for further investigation around the do no significant harm, the risk issues, not the low carbon credentials. They're very clearly there. In other words, should this be a priority going forward, given some of the risks perceived to build nuclear in terms of potential for accidents, challenges for decommissioning, and so on? So it's not resolved. It's still under investigation, to be very clear. We certainly count nuclear bonds, the climate bonds taxonomy, as low carbon, because there's no doubt they're low carbon. Whether you think new should be built is the question, really. And it's worth noting for our listeners that both the European Commission and the PBOC have indicated a willingness to work on harmonisation between the two taxonomies. And we expect that work to start in the near future, probably when flights resume, so there can be a face-to-face discussion, which means after the summer, I expect. But it is an expectation, and it has been a discussion. And China has joined the International Panel on Sustainable Finance, which the European Union convened. We now have 14 countries that are members of that, including India and Chile and Canada, and even New Zealand has joined that, to work on harmonising not only taxonomies, that is a critical part, but also in collaboration around sustainable finance measures. It's including incentives. And I think it's worth noting that Europe has a lot to learn. All countries have a lot to learn from China's work on incentives, because it's been the laboratory for incentives over the last 5 years. And Pei-Wan, you've been analysing this, what's been happening in the 5 pilot provinces and so on. Can you give our listeners a taste of what you see as the most interesting incentives that have been used in the 5 provinces that people internationally should know about?
Sorry, can you repeat your question again?
Can you give us some examples of the kinds of incentives that have been brought in provinces in China?
We actually, at the very beginning, we have 5 pilot province or regions, but actually right now I was told there are 9 already. Last year was 7. So that's China's speed, right? Okay. So I don't even know the exact number. I was told 8 to 9. Several years ago, we did a joint research together with CBI about the local government's incentives to the green bond market. And I think that's actually designed a very good framework to describe the policy instruments that local government and actually central government can use, even in some other countries. So I still remember, first of all, the policy signal, which means that government can publish a document saying that we support green bond. That's quite important in China's market because the market will follow the policy direction. And second, it's convenience environment, or the government as the public body to facilitate the happening of this green bond. Sometimes it would be quite easy, like a fast track facility. So if you issue a green bond, a labeled green bond, a CBI certified green bond, then you enjoy the priority. You don't need to wait on the line. Maybe there are 10 or 100 on the waiting list, but you enjoy the first. If you issuing green bonds, or in some local governments, they will create some pilot projects. I still remember several years ago in Beijing, 4 years ago in Beijing, in Zhongguancun, that actually the local government organized some working group, etc., to identify potential projects. And I think right now there are still several pilot provinces already established the so-called green bond project database, or green project database. I think with that, there will be higher possibility to identify the green bond, potential qualified green bond project. And number 3 is finance physical incentives. That's the tough one. And that's the one that the issuers and investors want. And I think the early discussion was hoping that there will be tax benefit, etc., but it was quite hard. So it's not happening yet. But in some local government, they will be able to use the local fiscal budget to subsidize the issuers, third-party verifiers, or sometimes investors. And that happened in Jiangsu province, in the city of Shenzhen, etc. And the final instrument is some government recognition and awards. And maybe we'll integrate the performance of this green bond underwriting business, issuance into some sort of rating or scoring, because some business association, for example, will rank the investment banks in China every year. So green bond underwriting business will be taken as kind of added score to this system. So I think these are the experience, and I think some of these instruments are still functioning in different regions in China.
Lot to learn. So we've had a discussion about transition bonds and where we think we might see these coming out of China going forward. I just want to state, for the climate bonds perspective, we see transition bonds as an important sub-market of the green bonds. You know, there'll be other sub-markets, there'll be blue bonds. And we note there's growing interest in China for blue bonds that finance water development, fisheries restitution, coastal investments, and so on. So, but it's important to keep these part of the larger green bond market for liquidity benefit reasons and to avoid people having to run multiple programs. We can do this under one broad umbrella. Same with transitions. So it's very clear that it's critically important for us to take high carbon industries and polluting industries and to transition those and companies within them to becoming clean and green going forward. These might take longer timeframes than 1 or 2 years, they might be 10 years. I was incredibly excited earlier this year when Baowu Steel, I hope I've got the pronunciation right, Alan, announced that they were going to bring to market low carbon steel going forward. This is exactly what we need to see, because steel is a high carbon industries. We know that some of the cement companies are looking at low carbon cement. Cement's worth 7% of global emissions, about half of that in China. So these sort of developments, we would call transition developments. Now, these need to be still transition to our long-term environmental goals. You can't have a half and half, like a diluted milk. You know, it still has to be milk, but it's a longer time frame, it's more complicated, and we want to bring these people into the market. I would love Peiwan to talk to Baowu Steel about doing a green bond to finance this low carbon investment that they're doing. And maybe we should pick that up after this call. So we think this is going to be a growth sector going forward, especially as China is the world's manufacturing center, you know, and things like steel. I think it's last I read 17% of the world's steel is produced in Hebei province alone. So there's a lot we can do here. Am I crazy, Jonathan? Does this look like an opportunity, or is this going to be just too hard?
I think this is clearly where capital needs to get to, Sean. These entities who are on a genuine transition pathway need to be supported by the wider capital markets, banks, and the bond markets. And I think the challenge is, of course, how do you define, you know, what's the relevant pathway, and therefore assess whether the issuer or the borrower is indeed on that pathway. And I think a lot of, in the market to date, a lot of prospective issuers have been cautious, because it's a tough analysis, not to want to be perceived as making overstated claims about their transition, and find they then get criticism because somebody says, well, you're cutting at this rate, but really you should be cutting at twice that rate. So they've tended, therefore, to say, well, I'll just go conventional market. I won't try and label it at all. And I think that, you know, this is an area where I think in applying the definitions, and where, you know, your organization, Sean, has a huge role to play, is, as you just did, to say we actually want to, you know, come up with a robust labeling system for these bonds, such that issuers then can bring their stories forward and fund with confidence. I think that's the challenge, because historically, I think we've seen, you know, a lot of people, for example, would say, well, you know, I'm still using a lot of, you know, met coal to make my steel, therefore, even if it's 20% more efficient, I can't call it green. And similarly in the refining industry, and I won't mention any names, but you'll know, you know, the case from a few years back where there was a lot of criticism for a refiner who was making efficiency upgrades. You know, was that labeled appropriately? So I think we have to sort of, in trying to drive the market, make sure that we don't drive prospective issuers away from the market. And the way to avoid that is to have, you know, the best clarity, the best guidelines out there. So the work of, you know, you guys, and the work going on at ICMA and the GBP under sort of transition guidelines as well, I think is crucial.
So we've got work to be done. Just a little plug here, if I may. On September 8th, 9th, 10th, Climate Bonds will be running its annual conference around the focus of green transitions. And on that date, we'll be launching a white paper on exactly this question, trying to put a framework into it going forward. So watch this space going forward. Peiwan, you have tomorrow, I think, your annual CIF conference. Have I got the date right? You've got a lot of people. This is a conference that we've been privileged to be able to participate in the future. In terms of the themes there, how much is green finance a growing part of the interest of that ESG audience that you're collecting, and particularly amongst investors? Tell us what you're seeing.
Thank you. Well, can I just comment a little bit on the so-called transaction bond? I think
Please.
this is a great idea, and I still remember several years ago we talked about this brown to green idea, and you always point out that it's a dynamic approach. It's not a one-off shot that company just issue one-time green bond that means nothing. So I'm just wondering, or a suggestion is that how we can consider this dynamic approach on this green bond transactional bond standard or framework, so that we can really stimulate forward-looking and institutional-wise, not just project-wise, level of commitment, so that we can stimulate the process, the systematic change. For your question on tomorrow, welcome. I can see there are 100 people here, so welcome to join us tomorrow around the same time from 3 p.m. to 6 p.m. The China Safe NUC annual conference. This is summer, so it's summer summit. The annual conference, we need you. So this is the invitation to you and Jonathan that we would love to invite you to join us on the 1st of December. That will be the annual conference. And the subject for the annual conference will be ESG mainstreaming. And the subject for tomorrow is actually ESG investing in the context of COVID-19. So it's very timely discussion. And we also include one section on green bond, and Shao Han from CBI-based China office will also participate to share her views on the green bond new proposed standards. And of course, the discussion tomorrow will more about ESG green finance in general. Green bond will be one of the subjects, but not all. But I can see that people, first of all, as I said, even though the ESG market it's relatively small compared to green bond, not to mention green credit. But there are more and more mutual funds looking at this market. So it's quite popular areas now. I think one interesting area that connected to the green bond market is that we see some banks, commercial banks, its asset management arm actually sell the asset management products to the wealthy people in China. That they call it the ESG high net worth wealth management product. And actually they heavily cover the fixed income market. So I think this will be an interesting opportunity for the future of the green bond market development in China. And that's also one interesting link between green bond and ESG. And of course, green loan and ESG, green loan and green bond is another big story as well.
Okay, thank you for that, and good luck with the session tomorrow. And of course, Jonathan and I will be at your conference on the 1st of December, and I certainly hope travel will be open then, because I prefer to be there in person than virtually, but let's see.
Hopefully.
So that's a plug, everyone. Look up Sintao Green Finance and you will see the details of the conference. We need to wrap up. We're in the final minutes of this. I am looking for a few final comments, but before I go to the final comments, folks, I've got one question here about credit ratings. So the international investors coming through Bond Connect or otherwise have sometimes not as comfortable with domestic credit rating agencies as perhaps they should have been. And we saw last year the PBOC give a license to Moody's and Standard & Poor's, and I'm not sure about Fitch's, to operate within China as wholly owned enterprises. Moody's, of course, has bought into Sintao Green Finance as well, although that's different to the credit rating. On the credit rating side, do we see that? Has it made any difference? I mean, for example, an investor coming in through Bond Connect, are they seeing any credit ratings by international agencies? And in terms of an understanding of domestic credit, I'm curious, for Jonathan, from your perspective, is this really important, or is this just a matter of overseas investors doing a little bit more due diligence around what's happening with the domestic credit rating scene? You know, will Moody's and S&P's doing credit rating for domestic companies be important for overseas investors, or is that a red herring, is what I'm asking you?
I think it might depend investor to investor. There'll be some for whom it'll be important, the sort of the brand name of the rating agency, and for others less important, and who might actually value the fact that I'd rather work with the local agency because they may have a stronger track record, a team that better understands the underlying risk. So I think we'll have to see how that evolves. I think as always, it's good that investors have choices, and the sort of natural selection will no doubt work. Those who are perceived to give good service, I'm sure, will come out and thrive. I think one of the key components to whoever does that, though, must be that who gets this whole challenge of how do you get sustainability or ESG issues properly reflected in core credit ratings. I personally think that's one of the biggest challenges that's in front of core credit rating agencies as well. Someone asked a question earlier about sort of how much do people use ESG ratings. Well, I think ESG, yes, but getting them in core credit ratings, to Pei Yuang's point about, if we want to be mainstreaming this, we really should understand post-COVID that these sustainability issues, if you get it wrong, you take a huge financial hit. And I think, we are clearly seeing the rating agencies try to address that. There's maybe some work for them in looking at their product offering, particularly around timeframes, because they're often looking at risks that are sort of likely to or potentially materialize within relatively short periods, and that may not give the full view. So I think there's some product development opportunities there. But to me, that would be the critical point, rather than and who does that well, rather than the brand is A or the brand is B.
That makes a lot of sense. Wrapping up, we've made some recommendations in this report about going forward. We've talked about the need to harmonize between countries, between regulators, around not only taxonomies, but reporting and transparency questions. And we discussed earlier in this session an example of that, the NDRC versus PBOC stuff. We've talked about the need to grow transition brown to green. We talked about the need to investor education, which of course is Pei Yuan, something you're doing with your work and your conferences. And we think there's going to be munis as a growth area. We've seen one so far and one coming up, and ABS. We've also suggested that maybe this year could be the time for China to try a green sovereign. We've seen France issue a green sovereign bond. We've seen 16 countries now issue a green sovereign bond around the world. Germany's coming to market. And in fact, in a couple of days' time, I'm hosting a webinar, a panel with the treasurers of Netherlands, France, Germany, and the UK. So this is a global movement as a way of providing an example for what China, a demonstration of what China's doing. It seems like a good idea that China consider this. You might like to make some remark, tell me your view about whether you think this is even possible. But I want to go now to final remarks to take us out, final thoughts or reflections. Alan, I'm going to start with you, and then I'm going to go to Pei Yuan and then Jonathan. Final reflections, Alan, what haven't we covered today? What do people need to know about going forward?
Yeah, I mean, Sean, you just briefly mentioned all the key points, the key takeaways, where we can see the further growth from ABS, munis, local government financing vehicles, and sovereigns. So my final word is, please take a look, go to the CBI website and take a look at the report. Thanks.
Thank you. Pei Yuan.
A good advertisement. So I don't want to do any more advertisement, but I think it's quite important also to push the disclosure of the bond issuers, not just green bond, but also the typical or non-labeled green bond, because as Jonathan said, that if we hope to see ESG rating whatsoever connected to the bond issuer, fixed income, etc., I think stronger disclosure will be needed from the fixed income market. In the past 2 decades, we focused on equity market. I think right now it's needed to focus on to start the disclosure policy in the fixed income market as well. ESG disclosure.
Good point. Very good point. Thank you, Pei Yuan. Jonathan.
Yeah, well, and I understand, Peiwan, to your point, I understand that the regulators have some pretty strong new disclosure requirements that they're about to unleash on the market. So we may see some big changes in the next few months. Sean, I mean, to your question, I guess I was looking, you had 3 key recommendations at the back of your report. Looks like number 1, your wish has been granted, because it says here, bring China's green definitions closer to international ones. So keep writing your reports. People are reading them. So that's great. And then I think without repeating what the other guys have said, which I completely agree with, I think this engagement around transition is going to be key, because the COVID has, taught us that when these sustainability risks hit, they are brutal and they're unfair. And it's the sort of weaker or disadvantaged members of society that get hit the hardest. And so we have to be thinking of this transition process in making sure that it's fair and just. So transition for China, that has clearly, as most large economies today, has relied and used coal to grow those economies, create wealth. And China now has to go through that transition. And if it gets it wrong, it could be very, very painful indeed. I'm old enough to remember a childhood in the UK when the UK was pulling out of the coal mining industry, and it was tragic consequences because the transition wasn't managed well. So, and that's just one sector. And to your comments around steel and those technologies, can we see more hydrogen used as energy in steel making processes? That's being talked about, electric arc, and so on and so forth. I think as a finance community, the more we can do to help sort of pave a pathway that helps to create those signposts and work together, obviously with the government in China, I think that's where we can really add a lot of value. And of course, you guys at the Climate Bonds Initiative are right in the forefront of doing some great work there.
I'm glad you mentioned hydrogen. We've just joined China's Hydrogen Council, and we do intend to do a lot of work this year on supporting the growth of that particular sector, which we see as a pivotal sector for the transitions in other industries like metals and mining. So interesting point to open up on. People don't think of these things, do they, as steel and hydrogen and other areas as needing to be green, but we need those things. So we've got to figure out how to green them as quickly as possible. And there are technology paths open to us. Our listeners, thank you very much for joining us today. This is the end of the session. You've heard a lot of interesting stuff about the potential for this market based on the fantastic foundations of last year. Remember, it grew a third last year. If you look at the combined green and social bond market, we've already seen growth this year. These are linked markets. They are not separate markets. We need to make sure that we extend our understanding of what are robust approaches to the right investments to make beyond green into the resilience and the pandemic and the COVID as well. We need to understand that resilience and recovery investments need to be in line with their understanding of building climate resilience and environmental resilience. So we've got to do work on that this year. We'll certainly be working with our colleagues at Sintao and at HSBC to try and expand people's understanding of this. But in the meantime, thank you for joining us, and please, good luck in your quest, our joint quest, to build a sustainable society, to build ecological civilization. Thanks everyone for joining us today.
Thank you. Bye-bye.
Bye-bye.